This week is very packed, and the main event for the week, of course, is that FOMC meeting that is coming out on 18th. My name is Samson Mzera, and welcome to this session of the Market Watch series, where we'll be covering what's happening in the markets, how it's translating on the charts, and what to look forward for. So remember to like, share, and subscribe. So coming off Monday, it was one of those very muted days. However, we did see some activity on the dollar index where it weakened further. And this is based off of that expectation of a cut. Now, we are still trying to understand whether we'll have a 25 basis point cut or a 50 basis point cut, with some analysts even projecting that the Fed ought to cut by 75 basis points. And this is a bone of contention and why there is so much uncertainty as we approach tomorrow's FOMC meeting. We do know that a cut is fully priced in. However, yesterday we saw that some analysts came out and said the Fed should cut with at least 50 basis points to be on the safe side, because inflation is already in line with expectations. And probably this is where we saw the dollar index weaken over the early hours of Monday. And it was mainly due to some currencies such as the Australian dollar, the New Zealand dollar, and the British pound are what led to that dollar index weakening over the hours of Monday. Others remained quite muted, for example, the Euro USD pair. Now, we have broken out past a support level. However, right now it seems as though things are very calm, because we fully priced in yesterday's unexpected events. That was that news coming out that the Fed needs to cut by 50 basis points. And that is why we are seeing sort of a flat or a consolidated move on the dollar index today. And we are still expecting some weakness from it, because as we approach the news, it's going to be more and more apparent what is going to happen with regards to the cut. So hours before the news, we might continue seeing some weakness. However, the crucial thing about tomorrow is the FOMC meeting, apart from the cut. If we see a 25 basis point cut and a very dovish Fed, the market is still going to interpret that as signs of aggressiveness, and we might see the dollar weakening. However, if we see a 25 basis point cut and hawkishness, where the Fed is still trying to sound cautious, then we might see a reversal of these expectations that are coming in the market, and the trend, for example, in the dollar index. So we might end up feeling that imbalance we are seeing in the 4-hour chart. However, on the other end, if we see a 50 basis point cut and hawkishness and caution, and the Fed being very cautious with their tone, then it might not be such an obvious downtrend as it looks at the moment, because the market is already trying to price in both the 50 basis point cut or dovishness coming in from the central bank tomorrow. So it's very cautious to pay attention to the FOMC statement and the FOMC meeting, as much as we're seeing them cut interest rates tomorrow. And that is what is going to act as forward guidance in what the expectations for the next meeting should be. So that is what traders are actually focusing on. So that downtrend has already priced in the possibility of those cuts. We just need to know what the forward guidance is and whether we're going to be surprised with that 50 basis point cut or not. Over to gold, we experienced that rally upwards last week, and we are now at new highs. We are very close to 2600, and this is a level we might be very interested to see if it can be hit. However, in the meantime, we are in a consolidation level, and the bias is still slightly tilted to the upwards or to the upside. Why? Because we're still expecting those cuts. There is very little reason to believe the dollar is going to strengthen significantly against gold at the moment. So we have to approach gold very cautiously heading into tomorrow's meeting, as our bias is still upwards. So if you're looking for reversal trends, it might be very tricky because of that prospect of a weaker dollar, because a reversal trend in that trend implies the dollar strengthening against gold, and that isn't looking highly likely. In as much as it is a possibility, it's not looking highly likely, and if it does, then we might see gold dropping to fill that imbalance. However, again, back to the hiking and cutting story. If we see, for example, the Fed's tone is very dovish or more dovish than expected, then we should expect gold to continue trending higher. However, if we see the Fed's tone is less dovish, if they still have this hawkish tone, or if they have this cautious approach to cutting rates, where they're very concerned about inflation still being sticky and terms like that, then we might see the dollar reversing or gaining some of its weaknesses, or reversing some of its losses, and we might see that downtrend finally play out on gold. Having said that, thank you for tuning in to this session of the Market Watch series. Remember, if you want to trade any of these assets, be sure to set up your account at hfm.com. And for more details about this, follow the link in the description. And see you in the next one.